Alright, hey guys, good afternoon, and welcome to this the free video here for the futures tomorrow. It's going to be Wednesday, Fed Day tomorrow. The question, will Yellen yet again sing like a dove? We shall see, but certainly we have an opportunity and an excuse for some volatility tomorrow, and I want to look at something here and see if we can kind of lay out an idea, a plan. When we see something like this, right, we sit down, we leave that wick on the bottom, we get these, closes like up in the top part of this candle like that. We want to see in the very next session, honestly, but certainly very soon thereafter, ideally the very next session, you want to see a trade through the high of something like that, and that's what we got. Along in here, you can see we were trying to sit down a little bit, but what was happening is every time we sat down, the buyers would respond, and they left these wicks on the bottom. So the buyers were present there, even though the market was trying to, it appeared trying to break a little bit. Realistically, all it was doing was sitting back down into like its 8-period exponential moving average, and the buyers were present, and they were evident in their leaving those wicks on the bottom. Okay. So what we've done is we've come in from a 2013, these are adjusted September quotes. They're about 10.9 maybe points off from the June quotes. If you remember, the actual high that came in up here for the June quote was right up, nestled up against that 2120. I think it was like 2119.75. But the adjusted for September was around 2111, which is, 20 minus 9 is 11, right? So anyway, 2013 to 2111 is a very, very close to a almost a perfect 100-point move in the S&Ps, and with that, we got that non-farm payroll report, and we came in, to that end of that week that was preceding, this week, and we were looking for some little bit of pullback. So what is a pullback actually? Well, the 100-point move, a pullback, would be back into the area of this 50%, maybe 618, right in this area. We tried to define essentially this area pre retracement or break as being somewhere between 70 and 50, and we kind of said, well, maybe we'll split the difference, call it around 60 or so, something like that. That'd be cool. But knowing that it could have been anywhere in here, and it looks like today traded down to, I don't know the exact print, I want to say it was like 54.70, basically 55. It's like 54.75 or something like that. Here's what I want to note though about today, all right, and that is that yes, we've gotten this retracement back into the area of the 50 and 618. But today we made this pattern sort of thing that we were talking about last night's videos, and that was if we could sit down a little lower but reject the lows. That would be ideal. Reject the lows and try to leave a wick on the bottom and trade higher into the close. And remember, ideally we said close and at least at a minimum the upper 50 percentile of the candle. So you look at this candle, eyeball it. If you if you need to do the math, you can actually just highlight it and really do the math. I mean, it's 73 by 70, whatever it is, 72, 75 by 54.75. So 54.75 was the low today, and the close is up at 67 and some change. So clearly, 67 and some change is a lot closer to 72 and some change than it is all the way down to 54. Right? It's in the upper 50 percentile of the candle. It's actually probably the upper 25. The stronger the better, but at a minimum the upper 50. That was the rule that we laid out yesterday in last night's videos. And we kind of got that. I mean, if you will, we made some slightly lower lows, rejected the lows, traded up off the lows, left that wick on the bottom, and closed in the upper, at least at a minimum, 50 percentile of the candle. Okay, so that's that. Whew, I just went into a coughing fit. Got a real problem with a cough right now. So I think I last left off by saying so that's that. So here's what we're looking for then in a perfect world then tomorrow. And that would be that the same thing is down here. you know, on the very next session, you get to trade through the high of a candle that looks like that, and here's another one that looks kind of like that. You get to trade through the high of that, and it leads to some continuation, and that's what we would look for here. We'll see how it plays out tomorrow. Of course, it's going to largely be dependent on what what's up with the Fed and Yellen after, and et cetera, et cetera. But we need a catalyst, and there's an excuse tomorrow, and I would anticipate volatility, of course, but given the way the price action played out today, I think the higher probability is for an uptick, and so that's the way I'll be looking for it tomorrow. Hope this helps. You guys have a good trade. Nice evening. I'm gonna hop over to the premium video now and look at a number of things. We got a lot of stuff going on with the grains and the treasuries too. My goodness. Yeah, we got an idea for the treasuries and metals and that kind of stuff in the premium video. So you guys have a good trade. Nice evening. See you at the next update. Good night.